Tesla keeps adding China users with registrations hitting records. Registrations of Teslas rose 32% in June from previous month, and competition to intensify is going to intensify with BMW, Mercedes, who are rolling their own new models. Welcome back, dear friends. This is Armen Haryan from TalkNews.com. Please subscribe to our channel and ring the bell because this is a very interesting developing story which I'm going to keep my pulse on it. Tesla kept gaining users in China last month, with registrations of its electric vehicles jumping to a record in the world's largest market as the virus is receding. In June, 14,976 China-built Teslas were registered in the country, according to data from state-backed China Automotive Information Net. That's a 32% increase from May and the highest monthly number so far for the carmaker, which is ramping up output after starting deliveries from its Shanghai plant around the beginning of the year. While the broader Chinese auto market is recovering slowly from a 2-year slump, wealthier buyers are drawn to Tesla's brand cachet. The EV market leader's sales now approach a quarter of the total tally for the category, the China Passenger Car Association said this month, making life difficult for a slew of local upstarts trying to get their businesses off the ground. Through June, there were 49,761 Teslas registered in China. Friends, success in China is crucial for Tesla, a Palo Alto, California-based company's valuation. Its shares have more than tripled this year, partly on expectation of rising sales beyond its domestic market. The company displaced Toyota Motor Corporation as the world's most valuable automaker this month, highlighting investor enthusiasm for its attempt to transform an industry that's relied on internal combustion engine for more than a century. Tesla will deliver nearly 4 million vehicles in 2025, including grabbing about 7% of China's total car market. Piper Sandler analyst Alexander Potter predicted in a note this week as he raised his price target to $2,322 for Tesla. That implies a further upside of more than 50% for the stock over the next 12 months. Yet, competition in China is getting tougher. Local electric vehicle rival NIO Incorporation has been energized by a capital injection from a regional government and a fresh credit line from 6 banks, while global peers including BMW AG and Mercedes-Benz Make Daimler AG are bringing out new models. In fact, just recently BMW rolled out China-made electric SUV to take on Tesla Model Y. Cars, by the way, have you seen it in social media? Have you liked it? Let me know what you think about that BMW's made in China Model Y. Speaking of social media, if you would please share these stories that I report in social media, that would greatly be appreciated and help us, friends. So cars built at Tesla's Shanghai plant, its first outside US plant, have made up the vast majority of Tesla registrations in China since opening. The company is building Model 3 sedans at the site and is preparing to assemble Model Y compact SUVs there. Friends, Tesla is gaining ground, pushing China EV bubble toward bursting. As Musk grabs shares in China, local startups are squeezed out. Fewer are succeeding in raising funds for development efforts, and I think consolidation of local Chinese electric startup companies is in the horizon. Tesla's new Shanghai plant has churned out popular Model 3 sedans for the past 6 months, catapulting the company atop the electric car sales chart and pining the pressure on cash-strapped local rivals. There was another casualty last week. Byton Ltd. is at least the third sizable electric vehicle upstart to throw in the towel since Elon Musk started his Made in China offensive after Bodrin Motors and Jingshan Salin Automotive Technology Corporation wound their operations down earlier this year. They fell victim to plummeting demand and amid the trade war and and as the government scaled back the subsidies that turned China into the world's biggest large EV market with hundreds of producers. Yet Tesla in just half a year grabbed a hefty slice of that shrinking pie, and its portion keeps getting bigger and bigger. The market leader's sales now approach a quarter of the total tally for electric vehicles, the China Passenger Car Association said last Wednesday, as wealthier buyers are drawn to Tesla's brand cachet. That's making life, like I said above, far more difficult for the slew of local contenders and risks exposing the multi-billion-dollar Chinese electric vehicle push as a bubble. It's more and more difficult for EV startups to raise funds, said Gui Dongshu, Secretary General of PCA. New energy vehicles have not yet been popularized on a large scale, so it is like the situation where there is not enough food in the temple and some of the monks are forced out. But that was a quote. Bloomberg says it's contacted Tesla, but Tesla representatives in China didn't immediately respond to a request for comment. The Chinese government infused massive amounts of money into the alternative energy vehicle sector over the past 2 decades, persuading foreign car makers such as Tesla and Volkswagen AG to start manufacturing electric vehicles in the country. A market that was initially dominated by local companies became more competitive, turning investors increasingly cautious on the fledgling local startups. At one point last year, there were almost 500 electric vehicle manufacturers registered in China. William Li, founder of Chinese electric car maker NIO Incorporated, foresaw the local contenders' predicament 2 years ago. In an internal meeting in May 2018, Li predicted that Tesla managing to set up production in China within 3 years would trigger the demise of many local rivals, according to people familiar with the matter. NIO declined the comment, but it now appears that the demise is coming not within 3 years, but in 6 months, because many of them have been out of business already or for law or something like that. But who knows what will happen in the next 3 years. So about 18 months later, the first Teslas rolled off the US company's assembly line in Shanghai. Monthly Tesla registrations in China now exceed 10,000 and help the company beat global delivery estimates in the latest quarter. Many startups' troubles worsened during 2019 while Tesla still was constructing its facility Giga Shanghai. Out of about 100 Chinese startups developing electric cars, a diminishing group of just 11 succeeded in raising funds last year, according to Bill Russo, founder and CEO of Automotive Ltd. in Shanghai. The total haul of 27 billion yuan, which is 3.9 billion US dollars, was split between NIO, Lixiang Automotive, Byton, WM Motor Technology Corporation, Xpeng Motors Technology Ltd, Bordrin, Innovate Motors, Airways Automobile, Singulato Motors, Leap Motor, and Hozon New Energy Automobile Corporation, according to Automobility. Byton and Bordrin succumbing to market realities so soon after their latest fundraising round show the cutthroat nature of the capital-intensive business. Sales of new electric vehicles fell 35% to 85,600 units in June, PCA said. Miao Wei, the Minister for Industry and Information Technology, said 5 years ago that the government wanted to add a few catfish into the electric vehicle market, referring to newcomers and foreign rivals that would help spur innovation and bring in advanced technology. The end result would be a more robust and healthier market for those that survive. The startups already selling companies such as NIO, WM Motor, and XPeng are in a relatively better position than those that aren't as far along with product development. Cui said, indeed, NIO, which secured $1 billion in additional fund from a regional government this year, sold a record of 3,740 vehicles in June. In contrast, startups that have yet to offer a product are at the biggest risk of suffering, said PCA's Cui. They still require significant funding to get their business off the ground, and the challenges in obtaining that could speed up mergers and asset sales. There are, too many EV companies chasing too few customers with constraints on capital, Russo said. Consolidating, saying, is inevitable. I also think consolidation is inevitable. I'm wondering if anyone will merge with Tesla in the coming years, or Tesla may buy some local competitors. What do you think, friends? Tesla is known for buying companies that it needs. Now, if there's a good company with good strategy, good technology, and is cash stripped, maybe Tesla will offer to purchase. So expect to see some consolidation in the Chinese market. In the meantime, Tesla keeps adding China users with registrations hitting records, but the competition is coming too. Well, friends, this is Armen Hareyan from TorqueNews.com. Please subscribe to our channel, share our videos in social media, Facebook, Twitter, and so on, LinkedIn. I would greatly appreciate, and that will help me tremendously and kind of pay off my hard work that I'm putting into this. And well, friends, see you in the next report. Have a great day. Take good care of your families and children. Peace be with all of you, and God bless you all.